Let's talk about money. For centuries, banks have been the giants of finance, holding our savings, giving loans, and moving money around the world. They're trusted, regulated, and have a long history of keeping our money safe. This is traditional finance, or TradFi, familiar, centralized, and run by people in charge. But now there's a new challenger, Decentralized Finance, or DeFi. Imagine a financial system with no buildings, no bankers, and no central authority, just code running on the internet. DeFi uses blockchain technology, a public digital ledger that's open for anyone to see but impossible to secretly change. In DeFi, smart contracts, self-executing programs, replace loan officers and paperwork. The rules are set in code, the same for everyone, and can't be bent by a single person. Anyone with an internet connection can access DeFi, no approval needed. It's a radical shift from banks as gatekeepers to open, permissionless finance. TradFi is built on human trust and government oversight. DeFi is built on transparency, automation, and global access. The question is, do we still need banks, or can code do it better? Centralization means someone is always in charge in TradFi. DeFi flips that, no CEO, no board, just code. If something goes wrong in a bank, you know who to call. In DeFi, the system is open to all, but you're on your own. It's the old guard versus the new challenger. The future of money is up for grabs. The first big difference? Access. To open a bank account, you need ID, proof of address, and sometimes a minimum deposit. Banks are gatekeepers, following strict rules that exclude millions worldwide. DeFi is open to anyone with a crypto wallet and internet. No paperwork, no questions asked. This levels the playing field for the unbanked and underbanked, giving them access to global finance. Next, transparency. In banks, your money is lent out, but you rarely know where it goes. The system is a black box. You trust the institution and regulators. DeFi is radically transparent. Every transaction is public on the blockchain. You can see where funds move and read the smart contract code yourself. No hidden fees, no secret deals. Trust shifts from people to math and code. In DeFi, you don't have to trust a CEO. You can verify everything. This is a fundamental change in financial accountability. DeFi's openness and transparency are game changers. The rules are clear, and everyone plays by them. That's a new kind of trust. Let's talk speed. Traditional banks are slow. International transfers take days, loans take weeks, and the system sleeps on weekends. DeFi never sleeps. The blockchain runs 24/7, confirming transactions in minutes or seconds. Loans are instant if you meet the requirements. No paperwork, no waiting. This efficiency unlocks new possibilities for global finance. Now, costs. Banks have overhead buildings, salaries, compliance. You pay for it through fees and low interest rates. DeFi cuts out the middleman. No buildings, no staff, just code. Transaction fees can be lower, and the gap between what savers earn and borrowers pay is much smaller. Savers get higher yields, borrowers get better rates. Smart contracts automate what thousands of bank employees do, but there's a catch. Network congestion can spike fees, and you're responsible for your own security. DeFi creates a more efficient, accessible market. The speed and cost advantages are real, but with great power comes great responsibility. You're in control, but also on the hook if things go wrong. The trade-off: efficiency and access versus personal risk. That's the new financial frontier. Banks' biggest strength is safety. Your money is insured, and there's always someone to call if things go wrong. Regulation protects consumers and provides peace of mind, but banks are slow, exclusive, and sometimes opaque. Centralization creates single points of failure and can hide risks. DeFi's strength is openness and innovation. Anyone can join, and new products appear fast. But it's risky. No insurance, no customer service, and smart contract bugs can wipe out funds. If you lose your password or get hacked, your money is gone. The user experience can be complex, and the rules are still being written. DeFi is empowering, but the risks are real. The choice: safety and support, or freedom and responsibility. So, who wins, the banks or DeFi? The answer is likely coexistence, not conquest. Banks have trust, assets, and regulation on their side. DeFi is pushing them to innovate, adopt blockchain, and improve. In the future, you might use a bank app powered by blockchain, blending speed with security. DeFi must become safer and easier for everyone, not just techies. As both systems evolve, finance will become a hybrid, You might keep savings in a bank but use DeFi for higher yields or fast transfers. Competition means better choices, lower costs, and more control for you. The real winner? The consumer, empowered like never before.